Hey, what's up everybody? I am Jason and you're watching my channel, Micro Investor. So there's been so much volatility in the stock market. I wanted to put together a list of stocks that I want to buy in a down market. I'm thinking about stocks that would be recession proof, ones that I can keep buying without trying to predict what the market is going to do. And in the end, these companies would still be around. That would be the strategy. So not in any particular order, the first one that I would go with would be Facebook. And the reason for that is Facebook itself is, the largest social media platform out there, and it's also a free service to use. Anybody can use Facebook, so people will continue to use their services, and the only way that they generate money is through advertising. And Facebook is a company that allows the advertisers to directly target who they want to get their ads out to. And it works great for companies that aren't looking to spend a whole lot of money on advertising, and it works great for companies that want to spend a lot of money on advertising. And I can see that being a way that will benefit Facebook a lot. And another reason why I would pick Facebook is look at Facebook's balance sheet. Look at how much total cash they have, about $55 billion. And then look at their total debt, around $11 billion. They have enough money right now to just wipe out their debt and still have plenty of money left over. But on the good note is, if we were to get into a recession, Facebook does have enough money to float itself for a long period of time. Next is Pfizer, ticker symbol PFE. Now this company is no stranger to recessions. This company has been through many of them actually, because they were originally founded back in 1849. Pfizer makes a lot of different medicines, vaccines that people depend on and will continue to take. So you see that Pfizer pays a dividend of 5% currently, and if they really needed to, that'd be something that they'd be able to cut. And in 2009, Pfizer cut their dividend in half. So they do have a history of doing that if needed. Now let's look at their balance sheet. So they have total cash of $9.88 billion and a total debt of $53.47 billion. So they have enough cash on hand to float them with their debt and their business for a little while. And like I said, if they were to cut that dividend, that would free up some cash. Next is Abbvie, ticker symbol ABBV. They are another pharmaceutical company, and they have a lot of products that people depend on. And Abbvie is also a big dividend payer. Their dividend currently is sitting at 6%. So if they needed to cut that dividend to help with cash flow, that is something that would be an option for them if they needed to. Now, of course, we wouldn't want any company to cut their dividend, and I'm just talking about worst case scenario here. But let's look at Abbvie's balance sheet. So they have total cash of around $40 billion and a total debt of $67 billion. So they do have quite a bit of cash on hand that can help float them for a while. Next is Johnson & Johnson, ticker symbol J&J. The main reason why I would invest more into them is because that they have a lot of products that people buy on a daily basis. And not only that, during our last recession, when a lot of companies were getting rid of their dividends, Johnson & Johnson actually increased their dividend. So that is something that that would really interest me in wanting to invest more to Johnson & Johnson during like a recession. And Johnson & Johnson has about $20 billion in cash, and their total debt is $28.68 billion. Next is at&t, ticker symbol T. What always interests me in at&t is that they're just one of my favorite dividend aristocrats out there. And also where I think that they're going with 5G, I think that there's a lot of benefits to come from at&t with 5G. So let's look at at&t's balance sheet. They have $12.19 billion in cash on hand and a lot of debt, $191.68 billion in debt. But a lot of that debt actually came from when they bought Warner. And with Warner, the Warner deal they got, of course, they got the whole TV service and all their customers, as well as HBO, Warner Brothers Studios, and DC Comics. So I wouldn't be surprised if they're just not going to sell off parts of the Warner deal that they didn't actually need. So we'll have to see how that happens, and they'll possibly be paying down some of my debt. But all in all, I still think that at&t would be a great company to buy and see where that grows into. Next is Southern Company, ticker symbol SO. And the reason why I pick Southern Company is because they're an energy company, and a lot of people depend on them. And regardless of where the economy goes, Southern Company will still have business because people are going to still need power. So their balance sheet, they got about $2 billion in cash and a total debt of 48.69 billion. So that's quite a bit of debt for them to actually have. But like I said, this is an energy company. The customers are already there. They don't have to work for more customers. And at the same time, there's just going to be more and more electricity that's going to needed to be used as industries like electric vehicles and all that continues to grow. So that's a company that I feel safe investing into. And if things were to get pretty bad for a Southern Company, I wouldn't be surprised if they had to cut their dividend a little bit to help with cash flow. Next is Intel, ticker symbol INTC. Their products continue to grow in demand regardless of how the economy is. And they're getting into more and more industries like the automobile industry. So I can just see, Intel's business just always being there, and whatever the economy might throw at it in the short run, I still think that there's a lot to gain from it in the future. And Intel has enough cash in their balance sheet to keep things running good for a while. They got $13.12 billion in cash, and the total debt is close to $30 billion. Next is McDonald's, ticker symbol MCD. And the reason for McDonald's is they're such a great brand, and they're always going to have customers coming in. They have such a good business motto, and for the most part, a business like this, a fast food business that's run really well, is for the most part, recession proof, unless people completely have no money to even go out and buy a cheap hamburger. And McDonald's balance sheet, they have close to $900 million in cash and total debt of $47.56 billion. Now, McDonald's pays an already dividend, so I wouldn't be surprised if things were going to get tough for McDonald's, that'd be a place where they can free up cash by getting rid of the dividend in the future if they had to. Next is T-Mobile, ticker symbol TMUS. And the reason why I would do T-Mobile is I think that T-Mobile would be one that would have a lot to lose during a recession, but they would have the biggest benefit as far as a cellular company goes, simply because of with them merging with Sprint. They're going to have the largest cell phone infrastructure, and I think that there's a lot of great things that can come from T-Mobile in the future. So looking at their balance sheet, they got a total cash of $1.53 billion and a total debt of $43.53 billion. And that debt is actually going to grow when the whole Sprint deal goes through. And that's why I'm saying that I think that they would be greatly affected in a recession, but I think that they'd still be around, and I think that they had the most to gain in the long run, as they do have the biggest cellular infrastructure, bigger than Verizon and at&t. Next is Apple. Now, Apple is a company that I'd see still being dominant, regardless if we're in a recession or not. Their products are, part of everyday life now. And Apple has a pretty nice balance sheet. They got a total cash of $107.16 billion and a total debt of $116.75 billion. And the reason why they don't pay down more of the debt with the cash that they do have, they can do a lot more with that cash than paying down the debt, because the interest on that debt is so cheap. There's more benefits to just chip away at it and say buy a new business. Next is Dominos, ticker symbol DPZ. And the reason why I go with Dominos is that they have a really good business model that they're going with. The company has placed, locations in key spots where it works really well with deliveries, as well as, where they are with their application with, delivering the pizzas. And if you look at the stock, not that long ago, they had really good gains. The market's really liking what they're doing. But of course, they've fallen into this whole thing that a lot of these companies has, and the stock has lost all those gains here recently. And looking at Domino's balance sheet here, they got total cash of $190 million and total debt of $4.35 billion. And like I said earlier, these fast food companies, if they're ran right, for the most part, they're recession proof. Next is Delta Airlines, ticker symbol DAL. Now, Delta stock has been pretty beat up here recently, and so has the whole airline industry in general. But Delta is a company that I would still buy into regardless. If we were going to go into recession, I'd see it as a great buying opportunity because, when airlines do recover, I can see big gains coming with Delta. And also with their dividend, I can see that being a place that if they needed to, that they can, cut that dividend if they had to. And looking at Delta's balance sheet, they got $2.89 billion in cash and total debt of around $18 billion. Next is Crown Castle International, ticker symbol CCI. Now, they're the only REIT on this list, and the reason why I went with a REIT for this one is because they're different. They're not in basic real estate. They're in telecommunications. They have a lot of cell towers all over the United States, and that's their business is cell towers. Basically, they own the property that those cell towers are on, and they, of course, rent out that to other providers. And I think with growing 5G and Crown Castle being such a large holder of cell phone towers, I think that industry is something that will be able to continue for many years. So that's why I would go with Crown Castle. And looking at their balance sheet, they have a total cash of 196 million and a total debt of about 24 billion. So compared to how much cash they do have quite a bit of debt, but this is a REIT, so they do pay a pretty big dividend. So I wouldn't be surprised in the future if they needed to. That would be one area where they would have to, clean things up a little bit. Next is Walt Disney Company, ticker symbol DIS. Now, their stock has already come down quite a bit into a very attractive area for me where I want to pick up, much more shares. But Disney is a company that if we were to go into a recession, they would be one to overcome it because they're such a big brand. They have, they're in so many different things, with the theme parks and the movie studios and now streaming. There's a lot of areas that Disney will benefit from in the long run and continue to run for many years. So now let's look at Disney's balance sheet. They have total cash of 6.83 billion and a total debt close to 52 billion. But Disney did recently acquire Fox, which did tack on a lot of debt recently. And Disney seems to be working out things real well with them acquiring that. But this company in the long run will have no problems. It will just continue to grow profit, with them owning Star Wars and Marvel and everything that they have. This is a pretty dominant company, especially with Disney Plus now added into into it as well now. Next is Adobe. Adobe is one of the leading software companies out there with programs like Photoshop, Illustrator, Premiere, and they could take a huge hit if the economy was to take a big turn. And their stock performance over this last month is a clear example. And Adobe's cash on hand is 4.17 billion, and their total debt is 4.71 billion. So that's pretty good. So this list is just my opinion, not to be considered any sort of financial advice, but I'd like to know what you guys think about the stock that I mentioned. And are there any stocks that you're looking to buy if the markets are to continue to drop down more? Anyways, as always, everybody, please like, share, comment, and subscribe. I have new videos coming out on my channel all the time. Thanks for watching. I will see you in the next video coming very soon.